Paul, let's talk about Geo Group. Let's pull it up and give it a look. We've been getting a lot of requests. GEO stock. This is Geo Group is headquarters in Boca Raton, Florida. It's a publicly traded real estate investment. This is a REIT, Paul, in private prisons and mental health. We've talked about this on the show before. And recently, Paul, the big thing is their dividend is dropping. Maybe we get some help out there about the exact specifications of what's going on, folks. You can let us know. Those of you who probably know more about this than us, but I definitely want to get Paul's take on it. Go ahead, Paul.
Well, I think when we did the stock, I remember saying, look at our dividends of $213 million versus a 5-year average free cash flow of $151. So it was sitting there saying, okay, the last year was $333 million in free cash flow. So, okay, it's possible. But when you look at the 5-year average of 150, it kind of makes it difficult to sit there and say, how is this sustainable? You know what I mean? So
yeah,
I don't know. And they just recently announced, let's look it up. Yeah. So they're cutting the dividend to maximize repayment of their debt. Let's see their debt levels. Let's see their balance sheet. They have $3.3 billion in debt. Total liabilities, it's been pretty stable. So either way, that's the thing, guys. When you look at dividends, I'm glad this happened because we look at dividends and think, oh, free money. What you got to look at is this: can the company really sustain that dividend? And when their average free cash flow of the last 5 years is lower than their annual dividend, at some point something's going to give. They might sit there and say, listen, we need to hoard our cash. We need to make sure we keep our cash in house, pay down our debt, increase our net income, whatever they're going to do with it. That's a very, very common theme amongst companies. The lower the ratio of their cash flow they're paying out in dividend, the better. And actually, that might be a metric we add to the to our metrics page of what percent, because there's a dividend payout ratio that's based on the earnings. I'd rather base it on the free cash flow, because the free cash flow is what you actually use to determine how much money is being, how much can they really afford their dividend. That's the big factor there.
Paul, should we run, while we're talking about Geo, I guess the real question is, should we run our 8 pillars on this, knowing now they're going to have potentially more free cash flow they're not paying out as a dividend, and the stock has since tanked? Is it a time to buy? Let's just take a look like it's new to us, because it might be new to some people, and we haven't really hit them with the 8 pillars yet today, which is our motto here, the 8 pillar peeps. Let's keep going, Paul. So let's first look at what is the market cap for Geo Group.
So Geo Group is a $745 million company, $2.35 billion in revenue. I think when we looked at them, they were a $1 billion company. Net income of 113, so a very low PE, and that was very attractive to me. Low profit margin, so 1 check and 1 X. I remember this being the big jump, $333 million in free cash flow. And I think I said something like, you got to understand, why is the free cash flow over double their 5-year average? Huge dividend yield, ignore that. Very poor return on invested capital and return on assets. So they're not taking their cash and reinvesting it at high rates of return. That's why you need a discount for them, because when they have their cash, if they're going to keep it in-house and they're going to reinvest it at these terrible rates of return, that's not a good thing. Charlie Munger always says that basically over long periods of time, the return on assets and the return on invested capital are about what the stock will do in return. So in order to get above that, you have to pay a massive discount to the stock. So income growth over the last 5 years, 2.18 to 2.35. So check mark there, but it is down slightly from 19. Net income, 148 to 113. That's an X there. So we have seen a decline in the net income, but let's figure out why there was a drop so big from the previous year. What numbers?
This is pillar number 4. This is pillar number 4. We want to look at the profit trends over the past 5 years.
I mean, they had a $16 million special charge, but they also had a lot less revenue, so that could be part of it. And they have, okay, so shares outstanding, 111 to 119. So it's an X there, guys.
They're selling off more
Another
shares.
X.
Mm-hmm.
Balance sheet.
Total
current assets, 500 million. Current liabilities, 422. So a check mark there. And like we said, the free cash flow is a check. It's negative 109 to 333, massive check mark. And the 5-year average of 151 times 20 is 3 billion. And they're currently a $700 million company. So the price of free cash flow is very, very low and very attractive. So your job is a couple-fold. One, figure out why the free cash flow has jumped up so much over the last 5 years. I mean, this is a massive number, guys. Look at this massive free cash flow number. This thing has gone, I mean, the company is currently selling for 2.5, not even 2.5 times free cash flow. Remember, most companies that look cheap are cheap for a reason. The value play is how you figure out why people are misrepresenting this free cash flow, this valuation. The stock fell a lot because they cut their dividend. Remember, people love their dividends. This could be a good trigger for you to go out there and figure out, well, why did they cut their dividend? Oh, it's to pay down their debt. Do they really want to pay down their debt, or is it something else? Are there other issues on the horizon? I don't know. I don't know enough about the private prison industry to be able to say that, but that's part of the due diligence, and part of what we learn on the 8 pillars is how we go figure that out. Oh, by the way, guys, look at this stock analyzer tool. It's not out yet, but when it comes out, it's going to be pretty awesome. So right now, guys, it's only 3 X's, which doesn't sound bad, but yeah, I don't know. I mean, I just look at this thinking you have to do a lot of research on this company to figure out exactly why they're so far down. Because even with that dividend being there and the stock not losing 25%, it still looked like a very good value play. So you have to figure out, you have to do more due diligence about why it is. I don't know the answers to that. To be honest, I don't know if private prison probably relies a lot on government money. I don't know how I feel about that. It's just the same as like those government contractors, military contractors. I tend to not enjoy those so much because I don't have to worry about what political uprising is happening and what we're doing in this. I just prefer to stay away from that and find more businesses that are more consistent, that understand their exact product.
A final take on Geo Group, even after this massive decline, Paul?
I mean, just go do more research on them. I don't think there's anything wrong with doing more research on them, but there's no immediate yes, because it has dropped a lot.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.